I'd like to welcome my special guest, Professor John Taylor, former undersecretary, also professor at Stanford University, and a new book out where he's not only an editor, he's a contributor, put together by the Hoover Institution. What a list of contributors. It's called Currencies, Capital, Central Bank Balances. Professor, let's get right into it, right with the book, okay? Let's talk about a currency, that's the yuan. The capital, they're getting very close to 7 yuan to the dollar. Will it breach? Will there be capital flight? How will the central bank, PBOC deal with it? Let's weigh in on the dollar versus the yuan in China.
Yeah, well, we got to worry about these capital flows. That's one of the purposes of the book. I think a lot of actions of central banks have encouraged this. There's a lot of capital flow volatility, exchange rate volatility. So one of the purposes of that book is to have more transparency, including by the PBOC and, for that matter, other central banks. So that's part of the theme, and it has to do with reforming the international monetary system. And I think there's a lot more talk about that. We're continuing to do it.
Well, you know, here's the issue that I think many investors have right now, that it definitely would behoove China and the PBOC to let the yuan move through 7. But the issue is also confidence in the currency and, as you said, capital flight. So I guess in the final analysis, how does an investor differentiate a manipulation to help exports versus the fundamentals where they need to deal with issues as fallout to the weakening global economy?
Well, it's hard to distinguish. That's why I think it's so important for central banks to get out of the currency manipulation impression, whatever it happens to be, and to be clear about what they're doing. China stabilized their economy, keep growth going. U.S., same kind of thing. I think the Fed has been moving in a more transparent direction. I think that encourages other central banks, and to some extent the PBOC as well. Need to encourage that because it is inherently confusing about what their goals are. They got to be explicit about what their goals are, which is keep the economy steady, keep inflation low. That should be the goal of the Fed and other central banks.
Now, the other huge issue, which is kind of related, is, of course, will China, the biggest holder of U.S. Treasuries, although their positions have moderated since mid-2017, will they sell Treasuries to help the cause with regard to negotiations? And one thing I'd like to point out, if you were going to do that, you may be selling Treasuries to perk up your currency as well. I guess what I'm saying is that they have two issues that kind of dovetail. Would that enhance them in selling Treasuries to support their currency?
I think they should let off using their large portfolio of Treasuries for political reasons at this point. They may. It's a system which doesn't have enough transparency in my view, but they should stay away from that. Right now, there's an important reason to have more stability, certainty. There's a lot of uncertainty about what's happening on the trade side. I don't think the financial institutions need to add to that. Central banks need to add to that. So I would steer away from that kind of a threat at this point completely.